It was another absolutely incredible week for Coinbase. We saw Bitcoin trade over 70,000 for the first time. That has correlated with more volatility and more trading in the crypto market. That's going to be a tailwind for Coinbase. This comes after the company had a really strong fourth quarter report. So we're probably going to see a lot of momentum on the trading side of the business. And on top of that, there's some positive trends for the USDC token and overall activity on the blockchain, which is going to be a tailwind for Coinbase long term. So I want to dig into what we learned this week, what some of the trends are, and why this stock was up 18% in just the last 5 days. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. I'm going to start by showing exactly how good this week was for Coinbase. Here you can see the trends for Coinbase shares, just a steady move higher throughout the week for shares. Not a lot of Coinbase specific news per se that drove the stock on any given day, but just a steady move higher as Bitcoin in particular continued to move higher. The direct benefit that Coinbase is going to have from Bitcoin is this is the custodian for most of the Bitcoin ETFs, and we have seen hundreds of millions of dollars flow into those Bitcoin ETFs over the last couple of weeks. That's going to be an incremental revenue generator for Coinbase. And I think one of the potential growth avenues long term is going to be turning that business into more than just Bitcoin ETFs and to all kinds of other cryptocurrency assets. But there are a couple of other trends that I just want to point out here. This is the volume on each of these exchanges around the world over the last 24 hours. And you can see that Coinbase has about $6.8 billion worth of trading volume on their exchange. Coinbase has maintained one of its position, maintained kind of the second place about position behind Binance. And volume is up from about 6 or 7 months ago when volume was about $1 billion or so, between $1 and $2 billion per day. So we should see a pretty sharp increase in the amount of revenue that's coming in to the Coinbase centralized exchange. And that's a vast majority of not only Coinbase's revenue, but also earnings. And that's what really dropped off of a cliff when the crypto winter hit. So this should be an incremental positive, should see improved revenue and cash flow in the first quarter at least. And if these trends continue, we could see Coinbase continue to churn out maybe not as much revenue as they did during the last bull market, but definitely improved results from what we've seen recently. The other thing to keep an eye on, this is just the last 7 days of USDC tokens. And this is the market cap of the USDC token, basically the amount of assets that they have under that token. Now, USDC token is now run by Circle, but it was started by Circle and Coinbase. The token is backed by actual assets, which are primarily in interest generating instruments like US Treasuries. So there's interest income on this nearly $30 billion worth of assets. That interest income then flows to Circle and Coinbase, who have a revenue sharing agreement for this token. That's a lot of background, but this is now one of Coinbase's biggest sources of revenue. And you can see that the assets behind the USDC token are on the rise again. Over the past month, we have seen assets grow from about 27.5 billion to nearly 30 billion. Now there was a decline about a year ago. Binance was selling some of their assets. The crypto market was just generally pretty slow, but now as things have kind of picked up, we're starting to see activity here improve. 24 billion about is where things bottomed out in the November timeframe. And now we've seen assets increase pretty significantly since then. What that is going to mean is more interest income for Coinbase related to those stable coins. And that's a line item that they have in their earnings release. And that should be a pretty strong number. I think could approach potentially $1 billion this year alone if these trends continue and if interest rates continue to stay relatively elevated, which I think is probably going to be the case given some of the economic news that we've seen lately. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, one of the questions that's worth asking is this rally gone too far for Coinbase? Coinbase is nearly back to its all-time highs. The market cap right now, about $60 billion. Price to earnings multiple, well, it's On a forward basis, the price to earnings multiple is about 200. Now, analysts have not been very quick to adjust their estimates for Coinbase, so I would take those numbers with a bit of a grain of salt, but enterprise value to sales, again, on a forward basis is about 12. So this is a pretty high valuation for a company like this. But let's put a little bit of historical context behind Coinbase and the current valuation. You can see here that in 2021, Coinbase generated $7.4 billion worth of revenue and $3.6 billion worth of net income. Based on the current valuation, that would put the price to earnings multiple at those peaks at less than 20 and the price to sales multiple in the high single digits. Now, that's by no means a cheap stock, but it's also not a crazy valuation for a company like this that has a lot of growth tailwinds. And I think there's going to be a lot of momentum behind Coinbase, at least for the foreseeable future. There's a ton of money in institutional money flowing into the crypto market right now. Those Bitcoin ETFs that I talked about earlier, Coinbase is involved in that as the custodian for a lot of those ETFs. You're also going to have more institutional trading. That's something that Coinbase provides a lot of back-end solutions for big banks like BlackRock. So that's going to keep the prices of cryptocurrencies elevated, keep the volatility high, and Coinbase actually makes money on that volatility. They want trading volume going through the system, not necessarily prices going up or going down. So from the trading side, I think that's a general positive. From the development side, I think we're only scratching the surface of what's going to happen on the blockchain and with cryptocurrencies in general. And what I mean is that the hope for crypto long term is not necessarily that it replaces current currencies. At least that's not my thesis on the industry. My thesis is more that the blockchain unlocks a lot of possibilities for development and ways to do things differently, ways to transfer money differently. Instead of using credit cards and paying a 3% credit card fee to make a transfer to a business, why not just do that with crypto rails? Something like the Base blockchain, with which Coinbase developed, could do that effectively for free. And so that could reduce transaction costs, would be the kind of innovation that makes current businesses more profitable. And even if Coinbase generates a small fee from that, that's an incremental revenue source for them for developing that kind of blockchain. This could happen on any number of different blockchains. But that's just an example of the kind of innovation that we haven't even seen really be a material impact to Coinbase yet. They also did some tests in the past few months on creating, issuing, and even maturing bonds on the blockchain. And that's the kind of thing that makes a lot of sense. If you're familiar with the bond market, you know that it's very difficult to trade bonds that aren't actively traded. So a company that may issue a couple $100 million worth of bonds, you're going to have to go to an investment bank, see if that investment bank can find a willing seller. They're going to take a fee, and then you're going to buy the bonds that you're looking for from them. All of that activity could just happen on the blockchain. It's basically an unlimited space to be trading bonds, to know who the actual owner of those bonds are, and then pay out coupons when they're due. And then all of that information could be known in public, exactly when the coupon was paid, who got the money, how much debt is outstanding. All of this could be great information for people to have about companies and make the system actually much simpler and more efficient. For Coinbase, that would be, for traditional financial institutions, that would be very disruptive. But for Coinbase, these are ways to grow the business because you're not involved in the traditional financial institutions. So I think we're just starting to see some of that momentum, some of the institutional money and the value increase for Bitcoin and some of these other cryptocurrencies, I think is an incremental positive because it's going to mean that the blockchain and all of the development that's happening on behind it has more validity than it had a couple of years ago when it was a lot of number go up, number go down, leveraged bets in the crypto industry. But now there seems to be much more maturity happening in crypto. That's where Coinbase really stands out, and why I think this is long-term, the kind of business you want to just buy and hold. I don't know if there's going to be a peak here, if valuations are going to fall, or if this momentum is going to continue. But as a shareholder, I'm just riding this wave and happy to have purchased when things were a little more down and out for Coinbase. But what do you think about the future of Coinbase and the momentum that we've seen recently? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you next time.